You really need to do what we are doing, you need to do professionally. So actually, I would say that having one is probably quite dangerous. Jolly, my husband, would help. We would be there doing everything ourselves. We would be sourcing furniture from Facebook Marketplace. Like, it was all very, we're in the dangerous realm of not really knowing what we're doing. It was hard, and actually it was harder than we thought. And also, people always ask if we'd do it again. And my answer is no, but probably not for the reason that people think.
I'm Ash Tate. Welcome to the podcast where we'll be having conversations with remarkable people who've turned ideas into reality. Rebecca, thanks for joining us on the podcast.
Thank you.
So before we get into how you got here and what you've done up until today, can you tell us about what it is you do today and the business you run? Like, can you give people an idea of the scale, are the numbers that will give people a flavour of how big a business you built?
Yeah. So I run what I would describe as a small property investment company here in Sheffield. So we do everything ourselves. So we look after about 100 tenants, and that's a mixture between students and young professionals and young families. The value of that portfolio is about £7.5 million. And amongst that, we also, as well as keeping stuff to let out to people, we also buy and sell property. So we've got a pipeline of stuff that we would call a flip to kind of buy, renovate and sell. We've got a pipeline of about £2.5 million over the next year of projects like that.
Excellent. So almost everybody I speak to anyway seems to... Buying a property or buying an investment property, it almost seems to be like the first goal. It's like, right, if I've got a second home, or maybe not second home, but if I've got an investment property, I'm doing well. What is that a myth? What do you think?
Yeah, so I think actually that is now a myth because the government does not want you to own one second home and be what they would call a hobby landlord or an accidental landlord. So from our perspective, you really need to do what we are doing, you need to do professionally. So actually, I would say that having one is probably quite dangerous, and especially with there's a wealth of new legislation coming in, which is making it even more difficult. That is going to really squeeze those people that have got that just one extra property. However, as an asset class, I do really strongly believe that, property is a really strong asset class. We've got a real supply problem in the UK. Our population is going up. We aren't building enough houses. So actually, if you're looking at supply and demand and what that does to an asset class and its value, then actually I can think of much, worse things to have than a second property in terms of its long-term value.
Yeah. Interesting. So dangerous, that's an interesting word. Why is, because I think people look at landlords that have properties and think it's passive income. That's the latest the latest phrase, and everyone wants passive income, and everyone thinks that owning a rental property gives you that passive income.
Yeah, so it is absolutely not passive, and I don't think there's any part of it that is passive. You can make it relatively passive by, outsourcing to a letting agent and things like that. But the reality is that from a legislation perspective, you are responsible for that property. So you can't say, you can't kind of say, oh, well, my letting agent should have sorted that out. The responsibility still falls on you. And there is a lot of red tape, quite rightly so, because, you do need to do things properly. There's a lot of stuff that needs to be done to make sure that people are living in safe homes. And if you just have one property and you are relying on somebody else, or you just don't really know, then it can be dangerous because you can very easily end up with a property that isn't compliant, that isn't safe, and suddenly, something happens to those tenants and that's on you. So I think that's the danger, that actually this is a business. I think, being a landlord is one of those things where, people wouldn't just go into any other business not knowing anything about it, but people accidentally, you know, they inherit a property and suddenly they think they're professional landlords. It doesn't really happen with a lot of other industries. So yeah, I think it is a profession. It does need to be run properly as a business. Otherwise, yeah, I do think it can be dangerous. So
let's rewind, because you've told us about where you are today, but this is quite a recent thing, right?
So it's recent, but then also has been a slow burner. So I have been obsessed with buying a house since I was about 16.
A house to live in?
A house to live in.
Okay.
So when I went to university, my dad, I was very lucky. My dad gave me an allowance and paid my rent. So some of my other friends that were in that situation just had a really nice time and spent their student loan and didn't have a job.
Yeah.
Basically, my sole intention of university was to graduate and to have saved enough to buy a house. So I got a job. I worked full time all of the holidays, and I saved my student loan. As well as some of my extra wages, so that by the time I was 21, I had a house deposit. So that's where it started.
Got it.
And then,
very sensible.
Yeah. So
don't know anybody else that's said anything close to that. So
that's where it started. When I bought that at the time, my boyfriend, who's now my husband, then I basically got him to knock a wall down in my 2 up, 2 down in Crooks in Sheffield to open up the kitchen. So he added some value under my direction. And that was it. So there was never a plan of being in property. I went to train to be a chartered accountant and later a chartered tax advisor. Then a few years after, I inherited some money. And again, it wasn't let's start a property business. It was, okay, let's sort a pension out in property. So I bought 3 properties, 3 buy-to-let properties. I had a limited company set up with my dad, but as a 24-year-old, my dad just said, well, you've inherited this, you've got this money. You go and you decide what you buy in. So it was all left up to me. And at that point we had 3 properties and we were the definition of hobby landlords. So Jolly, my husband, would help. We would be there doing everything ourselves. We would be sourcing furniture from Facebook Marketplace. It was all very, we're in the dangerous realm of not really knowing what we're doing, but doing everything ourselves. And that was again just a pension plan. So I was not taking any income from it. All the mortgages were repayment mortgages, so they weren't really generating any money at all. And it was just that, I'd get to 65 and I would have these 3 properties that wouldn't have a mortgage on them anymore. The value would have gone up and that would be it. So that was the start, and that was sort of the first sort of 6 or 7 years of owning property. And then my husband was a builder. So we basically I just decided one day that actually if we remortgaged the 3 properties that were in my name, in my limited company's name, if we remortgaged those and got them onto interest only mortgages, then we could actually release enough money to start doing flips.
Okay. Yeah.
So at that point,
and what, just flip?
Yes.
What's a flip for someone that?
Yeah. So to buy something that is generally run down, to refurb it, to add some value, and then to sell it for a profit.
Okay.
So at that point, we basically worked out that we didn't really need to make that much money at all to replace Jolly's income. So I was now a chartered tax advisor. If absolutely necessary, we could live on just my salary. So at that point, we pulled money out of the 3 properties that we got, and we bought a 2-bed terrace. Jolly left work and then Jolly renovated it. We sold it. We made some money and then we did it again.
Nice. Good.
So
that becomes quite addictive.
Yeah. So we did that a couple of times. It was nice. Like, we were working hard, but it was much more flexible. So the company that I worked at were very forward thinking in the flexibility. So before COVID, you could work from home. It was very just, as long as you get your work done, that's fine. Jolly working for a building firm, it was very structured. He had to be there 8 till 4:30. If they asked him to work on a Saturday, the answer needed to be yes. Like, it was, so we were very different. So that gave us that flexibility. In the meantime, we had 3 children quite quickly. So it also meant that I had time whilst on maternity leave to be doing the sourcing and admin and all those kind of things.
I mean, having time on maternity leave with 3 kids doesn't sound like it.
Well, so our third flip, I negotiated buy-in 2 hours after I'd had Theo.
Right.
I was waiting to be discharged from hospital, and the estate agent rang me, and I was available. Yeah. The baby was asleep.
I was going to talk to you about work-life balance. So there you go. That's not much balance.
Yeah. So it's then evolved from that, and I think I love to have a plan, but I'm also very flexible with a plan. So the plan at that point was just, can we replace Jolly's income and just be more flexible? We achieved that. We did a couple of bigger flips, and then we actually thought, okay, so what would, how can we build this up so the recurring income side is bigger and still not passive, but, it's there in the background. So about 3 years ago, we transitioned into buying HMOs, so houses of multiple occupancy, that are so we're getting those to hold, and really push that for sort of 3 to 4 years, which all culminated in me leaving work a year and a bit ago to do this full time.
So the decision to leave work, because that's a big decision. How did that come about?
So again, the decision to leave work was a bit of a roller coaster. So I'm very driven, and I had a very clear plan. So after I left practice as a tax advisor, I went in-house and really found my calling. So went from, and I was never a massive fan of being really technical. I like talking to the clients, and I like being a bit more pragmatic and seeing the business. So I went from being a corporate tax specialist to the only tax specialist in a FTSE 100 listed company. So I was just responsible for all taxes. So therefore became more of a generalist and more of a business partner within the business, making sure that tax was at the top of people's agenda and it was seen as important. Really found my calling. And at that point, I was really torn because I really wanted this corporate career. So we had a plan that was for me to get to where I wanted to be with my corporate career at the company that I was at. And then the dynamic between myself and Jolly is that I basically come up with all the ideas, decide what we're doing, and then Jolly just supports what we're doing.
Does he get a choice?
That's the dynamic. And what I slowly realised is that I was doing all these things to help the property business grow, and then I was just kind of disappearing to the office for my day job and leaving Jolly to pick up the pieces a little bit. I also really wanted to grow the business, but I was very restricted on time because I had a full-time job. So those doubts were kind of starting to creep in that actually this sort of 5-year plan of getting to where I wanted to in the corporate world probably didn't really fit that well with then what we wanted to achieve at Jolly Property. And then essentially I got frustrated at work and with the whole corporate stuff of how you get promoted and all those kind of things, and really threw my toys out the pram. And just one day I was just like, I just think I'm going to have my notice in. And Jolly was like, yeah, do it. So I did it. I worked 6 months notice and then left. So it was a really big decision, but actually by the time I made it, I thought, why have I not done this a year ago?
So no regrets?
Absolutely not.
So you made quite a lot of sacrifices though, right, to build up the portfolio you've got now.
Yes.
Well, I know one of them being you moved into a 1-bed flat.
Yes.
With 3 kids.
Yeah, that is correct. Yes.
So how was that? How did you come to the conclusion that that's what you were going to commit to? Because that feels, a lot of people wouldn't do that.
Yeah. So I think one thing that I've learned about myself over the last couple of years as we're doing more sort of for ourselves and for the business is that my sort of threshold for being uncomfortable is quite high. And I really like to push myself, and actually, you know, I get itchy feet if I feel like I'm not pushing towards something. So I think in hindsight, a lot of it comes from that. But essentially, we had renovated our family home before we had children. We were never going to stay forever, but it was a beautiful house. A lot of people, you know, thought that would be our forever home. And we were looking at moving, and I said to Jolly one day, I said, why don't we just sell, but not upsize? Why don't we just put all the money back into the business and we'll find another house to renovate, but let's just sell ours first. So that's what we did. And we achieved a great price for our house. And then we were looking at renting. And we were looking at renting. At that point, there was 3 children. They were all small. They were all sort of under the age of 5. Also 2 cats. And we couldn't find any, when we were looking, even sort of 3-bedroom houses, unless we were really wanting to then spend a lot, which felt like a waste. We just couldn't find anything that seemed decent. So we ended up moving into one of our own 1-bed flats, which was a spacious 1-bed flat. We put a stud wall up in the bedroom, so it was technically 2. Right. Although there was only one of the bedrooms had a door. Sounds
like a very small bedroom.
Yeah.
2 very small
so we had 3 kids. So they were in, we had bunk beds and then a double bed that was kind of pushed into the eaves because it was in the attic. And we lived in there for 14 months whilst we chucked some money into the business, bought some more HMOs, which essentially meant that I could leave work. But then also we bought another house, which we also renovated. So we're now out of the flat and in a nicely renovated house again. So we're kind of back where we were, just with a 14-month blip of discomfort.
Yeah, that sounds more than discomfort though. Was that hard?
It was hard, and actually it was harder than we thought. And also, I mean, people always ask if we do it again. And my answer is no, but probably not for the reason that people think. So it wasn't that pleasant. We were very cramped, all those things. But what I really found is that the business actually suffered because productivity wise, we had no workspace. I felt that I didn't have the headspace for a lot of kind of growth stuff. So I think as much as it served a purpose in terms of it freeing up the cash for the business, I think actually if we'd been in a better environment for that year, I probably could have achieved more.
Interesting. That's not what I thought you'd say. Yeah. Oh, interesting. So practical advice, there's loads of people listening to this that'll be thinking, I want to buy a property. I want to buy a rental property. I might want to start a property business. Someone that maybe owns their own home now and they want to get into the rental property business, what's some real practical advice?
So I think do your research, work out why is it that you're buying something? Do you want to generate some more income? Do you want it to be a pension pot? Whatever that final goal is depends, that then determines what you buy. There are very cheap places to buy where you feel like you're actually getting quite a lot of rent for your investment. But, is that property going to be worth much more in 20 years' time? So, if you're wanting income now, it might be a really good idea. If you're wanting it to be a pension pot in 20 years' time, you might not actually get the capital appreciation from it. So I think deciding what it is that you want is really important. And then also, how are you going to do it properly? So how are you going to be professional is that going to be that you're going to speak, you're going to have a trusted letting agent, in which case you need to do research because, there are different levels of service that they'll provide. Are you going to do it yourself? And if you will do it yourself, how are you going to make sure that you actually know what you're doing? And I think there's also an element of, the government has been on a bit of a tax raid on landlords for a long time. And, there are definitely ways of doing things more efficiently that again, depending on your own circumstances, whether you own it in your own name, a limited company, all those different things, it all just, depends on getting it right for your circumstances.
Mm-hmm. And what do you think? Because you're a mentor, right? You mentor other people who want to get into property. What do most people get wrong? What do most people get wrong? So people get wrong just buying something because it's, they've been looking for ages and actually they're getting itchy feet and they just want to get something bought. So because I work with a lot of people that are getting started in property, a lot of people don't have a lot of cash. So they're trying to build that cash pot up. So a lot of them are doing flips. So they're buying, refurbing and then selling. You really need to be clear on your numbers on that. And I think the biggest mistake I see people make is that they buy something, they think the refurb's going to cost way less than it actually does. And they also think that their sales price is way higher than it actually is, which is all just not a very good combination of factors when you're trying to make a profit. Mm. Do people or from what I've seen, I've had friends come to me saying, I'm going to buy this property, I'm going to renovate it, and they give me some ridiculous number that they're going to spend on it, like 20 grand. And I'm like, you'd be lucky to get change out of 50.
Yeah.
Do you think emotion takes over when it comes to property?
Absolutely, it does. And people just don't know. And I think as well, a lot of the amount that a refurb has gone up since 2020 is way beyond any inflation numbers. So actually I think you only need to be sort of 5 years behind with your numbers to be just way out. And I think people do get emotional about it because they can see the vision and it's exciting. They can see what it will be. So I think people they just get a bit carried away.
Other people that you speak to who you say, this is just not for you?
Yeah. So it does take a specific kind of person. So it's a really balanced line. So my background is accountancy, tax advice. So I'm very, very comfortable with numbers. And you have to be really comfortable with numbers, but you need to be pragmatic. So if I'm stacking a deal, so if I'm working out, how much I want to pay for something, what my refurb's going to be, what I'm going to sell it for, you can very easily just kill any deal by just being too pessimistic. So you really have to strike that balance with being realistic, but then not being overcautious. Your attitude to risk actually has to be relatively high, because although the risk is backed by some data, there aren't any certainties. So, I see people all the time that, that doesn't stack. And it's well, yeah, because you've just put in sort of buffer numbers in that are just going to kill it constantly. So I think you do need to be able to tolerate some risk, which not everybody can. And a lot of people just aren't persistent enough. So on average, for every 20 offers I put in, I normally have one accepted. People don't like those numbers. People just think that means there's no deals.
And why is that? Why are you having to put 20 offers in? Because
I'm never the best offer in terms of price. So when I'm buying a property, I am not looking for somebody that is not in a rush, doesn't care if it falls through, but just wants, even if they have to wait a year, they want the best price. Those aren't the people that I'm going to buy from. So I don't know that generally, I don't know that kind of person. So if I'm offering to a person like that, the answer is probably going to be no, because it won't be the highest offer. the offers that I have accepted are people that value certainty, that value speed, that value different things other than just getting as much money as possible for their property. So it takes a while to find those people.
Yeah. And I guess you've got to be quite, I don't know, you can't get emotional about this, right?
No, absolutely not. And I think that also comes from how many you do. And, now it's very much, that's the number that we want to buy something for. And if the answer's no, then the answer's no. Whereas 3 years ago, I would have gone back and been like, oh, right, okay, like what can we tweak? Or, can I increase my offer? And I think that comes from sort of, you think those deals are scarce when you first start. Like there's this scarcity issue, and you think, right, well, I'm not going to find another one for another month, and I wanted to buy something this month. But I think what I've learned as well, and it's the thing with negotiating, is people can smell desperation. So the minute that you are just genuinely, that is my offer, and you take it or you leave it, I think things just start to turn a little bit. And I've had a few of those recently where I genuinely have offered something which I really didn't think someone would accept. And it wasn't because I was being unfair. It was because that was, I was very honest. This is the number that property is worth to me. And I understand that that's too low. And they've come back and said, okay, yeah, we'll go for it. But I think that comes from experience and of knowing that it's not the end of the world when someone says no.
Yeah. And so maybe this is a question specific to flips, but how important is it to buy at the right price?
Oh, it's everything. It's absolutely everything. You make your money when you buy. It can then go wrong if you then suddenly mismanage the refurb, but you can't claw back from paying too much for something. Like it's absolutely impossible to claw back. So it's all about that purchase price. That sets the tone. That sets the tone for everything. And there are things. So we, for example, bought something during just before COVID, and the purchase price was great. Then we had COVID when all the material prices went up. So you're thinking, but actually house prices also shot up as well. So it worked out, but the fundamental was there that we bought it for the right price. Whereas, yeah, I think if you get carried away, you're suddenly just trying to claw back. And, I don't think I've ever spoken to anybody that refurbs come in significantly less than they thought it was going to.
Yep. No, me neither. No, everyone that's doing anything to a house, it's like, yeah, it cost double what I thought it was going to do.
Yeah. So you can't rely on that. Like you have to, you've got to just be really, really strict on that purchase price, which is hard. And especially when we've been buying HMOs, we've found that it is really, really difficult. But every so often something comes along that you think, right, okay, those numbers are right.
So the portfolio you've got now is, you said it's about 7 million?
Yeah.
I mean, that's a big number in relatively short space of time.
Yeah.
So how have you financed it?
So we started just with basically waiting to refinance so as I say, I started off with a pot of money. We bought things, they were on repayment mortgages. So then prices go up, you've paid down some equity, release some more. We've done a little bit of that, but it's slow. It's really slow, just waiting for kind of things to go up. So in more recent years, we basically have two strategies which fund further growth. So we do flips, which then means that if we need a deposit for something, which is normally 25%, that will be funded through the money that we've made through flips. And then we also work with private investors as well as banks. So generally a flip's the easiest example. So if we buy a flip that's £200,000, so a bank will probably lend about 150,000 for that purchase. But we work with a lot of private investors that will fund the whole purchase, which means that we don't have to find that £50,000. We then will again fund the rest of the refurb with private investors. And then at the end, we sell, they get their money back, they also get their return, and then we're left with whatever's left. So that is the fastest way. If you talk to anybody that is scaling a property portfolio, the answer is that they are working with a mixture of bridging finance for speed and for, at the point of purchase, private investors to top up and to pay for the refurb, and then the refinancing onto normal term mortgages, or the selling if it's a flip.
And is it risky? Because that sounds like a lot of finance. So it's risky, and it's risky, but it's all, these things are backed by assets. So there is an underlying asset value there that really dampens the risk. We've also got a cash flowing portfolio, which, so if actually, you don't make what you thought you were going to on a flip or something like that, you have then also got the cash flow from the portfolio to kind of prop that up if needed. It's a big juggle, and it's a real sort of big cash flow puzzle, managing ins and outs, dealing with, because mortgage companies generally, it's slow, it's unpredictable. You think that a refinance is landing yesterday, and suddenly there's another query that means it's not for 2 weeks. House sales, we talked about before, it's slow, unpredictable. So there's quite large chunks of money that you can plan for, but then it is an unknown. But that's, for me, that's where my skills come in. And that's probably, I think that's one of the most difficult parts, but it's the people that manage that well that do well. So somebody wants to get into property investment, flips, maybe buy-to-lets, whatever. Is there a minimum amount of money you would say somebody needs before they can even think about venturing into this world?
Yeah, so it depends who you speak to, because property is one of those spaces where there's a lot of education, and there's a lot of people selling very expensive courses to basically tell you that you don't need any money to get into property. So they'll tell you that your first time, having never done a deal, you'll just get a private investor to fund all of it, so you won't have to put any money in. And the reality is that, that's very, very unlikely. With no experience, that you're going to get that. So essentially, as a minimum, you need 25% of the value of whatever you're going to buy. There are other strategies to kind of help boost that. But if you're wanting to buy a property, that's what you need. You need your 25% plus some fees and stamp duty and things like that. So obviously then that amount depends on where you buy in and how much that property is. So it can be a relatively small amount if you're buying something cheap, or, a relatively big amount depending on what it is.
So when you mentor people, spoke about that, like what can you help? What do you help them with, or what can you help people with?
So I help people with what the plan is. So what are they aiming for? And we normally sort of look 3 to 5 years, like what are we trying to get to? Are we trying to get to that you've left work, or are we trying to get to that actually you've just got a couple of houses that are bringing a little bit of extra income in that you're not going to do anything with? What does that look like? And then what resources have you got, and how do we get there? So deciding strategy is a big one. If somebody wants to leave work in the next 5 years, then there's absolutely no point them collecting like one buy-to-let a year, because the income from one buy-to-let is not going to get any, no one's leaving work from that. So we do a lot around the strategy, and then we literally cover everything from finding properties, negotiating with estate agents, like finding stuff that's not on the market. I do a lot of like refurb planning with people, how to get finance. So, going through the whole mortgage process, bridging. It is like every phone call that I have is completely different, but it is a real kind of end to end of, and hopefully stopping them doing things wrong that I've previously done wrong. That's the aim, really.
Yeah, that's good. If they listen to you.
Yes,
yeah,
absolutely.
So what's the biggest mistake you've made?
So the biggest mistake that we've made so far is, I think there's probably two. So the first one is at the point that we felt like we had quite a big pot of cash, we decided that we would just buy a project outright in cash rather than, because it was cheaper than getting finance on it. And essentially that just created a bottleneck, because instead of leveraging our money and being able to do 4 projects, it was just all stuck in one. So that was a few years ago now, really slowed us down. But equally, I think that's a bit of a rite of passage when you're trying to grow your property portfolio, because I don't know anyone that's not kind of fallen into that trap, because you just think, oh, when I'm doing that deal, I don't have to factor in my interest costs there. So that's brilliant. Yeah, I've got the money. I'll just buy. So that's one thing. And I think the other is kind of moving out of our lane. So we've got a project which is really near to refinancing now, but we've taken a block of 3 flats into a block of 5 flats. It has been a complete nightmare, and it's just bigger than something that we want to do. And I think people think that sometimes, improving and kind of growing is maybe doing bigger things. Actually, what we've learned from that is, let's just do more of the stuff that we're really comfortable with and just do it in more volume rather than getting more complex and more risky. So, and I know a lot of people start off with small stuff and then they end up as developers and building blocks of flats that have got, 30 flats in. That this one project has really showed us that we've got no desire to kind of get bigger. It's just to do more of the stuff that we're really comfortable with, and do it in more volume.
Yeah, interesting. And I think from talking to other people in property development, whether they've done flips or, like you said, built massive blocks, actually the bigger the project, the more that can go wrong.
Absolutely.
And you could be upside down for a lot more money, right?
Yeah, exactly. So for us, that it's been quite a good reminder, because although it's a relatively big project, it's not, we haven't tried to build a block of 20 flats. So it's been quite a good reminder for us. And I think has also come at a time where, so when I left work is last September, that was the first time I can ever remember only having one job.
Okay.
So from being 16, I've always had more than one job, or I've been at university and had a job. I've always had a lot going on. And that meant that I then put my foot down so hard on the accelerator, because I had so much of this free time. And actually I've then filled all of my time and got even busier. And I think one of the things in the last couple of months has really made me realise that actually we've built something that gives us some freedom, and actually just slowing down a bit would also be quite beneficial. And that's not going to mean that I'm sitting doing nothing, because I can't do it, but actually sort of taking our foot off the gas from a business perspective and being busy doing other stuff, but not being 100 miles an hour, because I've definitely been like, having just one thing to focus on has really made me go kind of all in, which has been good, and I've enjoyed it, but it's definitely made me realise that, maybe 2026 will be a little calmer.
Yeah. So how do you manage that? Because I listen to lots of podcasts and listen to a lot of people, and people say it's all right. It's all right for you because you've not got kids, for example, or it's all right for you because you've not got a family.
Yeah.
But you've got 3 kids.
Yeah.
And a family.
Yeah.
And you quit your job.
Yeah.
And started a business.
Yeah. You make time for what you want to make time for. So Yeah, so I think that's a big thing for me. And when we talk about work-life balance and all those things, I think I don't want to sit and read a book I don't want to sit and read like a book that's a story. Like I've got no interest in it. Like it feels like a complete waste of time. And I know, a therapist out there would have a field day on, like why do you think that you can't waste your time? So for me, I think as long as you're enjoying the juggle and as long as it works, like I feel very comfortable balancing everything, and it works for me and it works for the kids, and we still have time to do what we want. I think having kids, it can go like one of two ways, because I don't know about you, but I often think like, what did I do like when there were no kids? Like I don't think I was sitting wasting my time, but you feel the time that you've got, don't you? Like you feel the time that you have. So I think as long as you're doing something you enjoy and you're managing to do everything, like I do think you have time for everything that you want to. My one caveat is when I left work, I trained for a marathon, which I don't actually think I could have trained for a marathon whilst I was still working, just from a logistic perspective. But yeah, I think it's just about things, you make things fit, and and also like I miss things with the kids. Like we were discussing earlier, like Jolly had to leave the school performance early today because he had something to do, like, but also that's okay. And like I'd rather the kids see that that like my life is not just about the kids. So sometimes I might have to miss half of the Christmas performance because I'm doing something else.
Well, and I guess you can go to the Christmas performance, right? Which is something that a lot of people can't. Exactly.
And that's the other thing, like it is a choice, isn't it? So, and when there's three of them, it's constant, the things that are in the middle of the day. But for me, I know it's really important to me for me to go to those. And my parents never missed anything big, but they were both employed. And so they were never at anything small, because if it was a sports day, they'd be there because it would be arranged and they would have booked it off work or whatever. So they never missed anything like that. But yeah, the small things that are just like, oh, actually, you don't really need to be there. It's not a massive deal. I know that then that's really important to me that I can be there. So again, that's a choice. So if that means I have to get up early and do some work or stay up late, it's a choice.
Yeah.
Which is the main thing.
I think that's it, isn't it? It's like, it's a choice. Like people say I've not got time, but they've got time for an hour of Netflix.
Yeah.
So, you should make that choice, haven't you?
And if it's something you enjoy, so like we went away and my mentoring business has been set up so that I can do it wherever. Like I have a couple of people that I meet in person, but it's majority on Zoom. So I had half a day when we were on holiday and I went and sat in the room and I did my mentee calls. And sometimes you can see people like, oh, you're doing some work on holiday. It's like, well, yeah, but I've just had a nice afternoon doing something that I enjoy, or I've done a couple of hours of emails when someone else has been sat reading a book. Like, I don't know. I think people get really caught up on what other people are doing, and if it works for you, then
absolutely, yeah. So, what's the end goal? Because you've been full time in this business for less than 2 years.
Yes.
Already built quite a big portfolio. So where do you want to get to?
If you'd asked a couple of years ago, then we had like real huge plans to be like the biggest HMO landlords in Sheffield, do like statement developments. And honestly, now I want to just get to a point where I just choose what I do every day and have very little stress unless I've chosen to be doing something. So yeah, that's there isn't an end goal now that's kind of, we want to get to here. It's very much just keep doing stuff that we enjoy, and that will be probably growing more slowly now, and just enjoying a bit more free time.
Sounds a nice place to get to.
Yeah.
Probably a good place to end, right?
Yeah.
So thank you for joining us. Really appreciate having us on.
Thank you.
Some great advice for people, probably people in the property business already and people wanting to start a business. And we'll put a link in the comments to your mentee page. You've got a mentee page?
Yes, I do.
So
yeah.
if people
You
want a mentor, that's where to go.
Thank you.
Thank you. I'm Ashley Tate. Thanks for listening. We'll catch you next time.